guys, how are you? I hope you'll be fine. So today our topic is how the wealthy use real estates to avoid the taxes. So let's start our video. So here's 9 ways the rich real estate owners save bags and use real estates to avoid taxes in it. So we can explain in this video the richest 0.1% of the American owns 1.8 trillion in real estates according to the Federal Reserves and your work, and it's the allowance and your capabilities in hours, and yet they are perfectly legal for the audience. So it's time to crucial your audience techniques and your some of these tax avoidance and your taxpayers and put homes in the country's house interest is that last estates and any appreciates in the property's values does not count towards their taxable estates. They can even discount the value and their properties by normal 30% of the setting of the family limited in partnership with their kids as members. So next we have the estate planning will review up into higher over the next years and have a country individuals and married couples can give them or bequeath 13.61 million and 27.22 million respectively before a 40% federal estates tax kicks in it, and assumption it and techniques is about but the assumptions bearing further legislations will come and will be questioned half of the end of the 2025. And here are 9 little known techniques and your some examples of using trust to give away homes in the countries. In the front of you, I have some examples for the taxable estates and real estates in your work. So, like it and like you, your professional and real work is simple. Here's the popular and the just years in the interest rates hikes and confer the and other tax benefits. It seems too good to be true, but there are a few strings attached. The few strings attached and transferring real estate to family limited partnerships at big discounts. So you can see often our parents or two parents post their business assets and real estate or stock as a general partner. So in general partner and cash distribution from the revenue generated by trusted and do not have control over the actual assets. So you can see here's the work and want to hold the purchase string. So you can hold the purchase string. This control is appealing, and you hold the purchase strings. And next we have another sweetener, and you can claim a discount on the assets transfer the FLP and use even less of your estate tax exemption. So passing properly and you're from the Ridley family behind it and seeing what you do and what's your assumptions and many more. So next we have the avoiding paying and wealth transfer taxes and provide for future hires. And next we have there are so-called density trust or those taxpayers and your examples is trust. These trusts even they protect the property from future here's the creditors or divorcing spouses. So and it's very embarrassing. So here's how these countries long last and long dust. So you can see for any state's taxes. So in short, an attorney set up a trust for a wealthy client. The trust owns a life insurance policy that's created offshore. The assets in the trust are created and your work. And you can see it's the free for the estate taxes, and it is only relevant to the other wealthy often requirement 5 million in upfront premium as well as a small army of professional of setup and the administrators, including trust and estates. So you can see here's some examples, and your assets manager and the custodians and tax advisors, it's everyone sees what you do and what's your work and create state the attorney, assets manager, and custodians and the tax advisors as rich Americans has managing for your assumptions and presently, but Senator Ron Bentley has said he is investigating PPI and the industry leaders, including it, can work it. And the charity of the multiple words, it's like the theme about you and your work is used by the late first lady. And in the late first lady, you can see it's not a big deal and it's not a casual for reminder and beneficiary picked by the creator and typically their children's and your work. So these trusts must be funded with assets that the produce income such as the interests and works. So you can see it's very social to plan the children that perhaps the spouse does not know about lawyer, advertising, stock business, insider, and your work is willing to gentle properties with charitable trust that give the reminder to the heir. Also known as the jacket or trust, since it was used by the late first. Here's the bench curve picked by the crimer. So you can see is there children mentioned pick that grander typically in the children's and your works. So I can see and I do it by the typically their children mentioned pick the generator and these interest rates. This interest rates is like the time of the funding in the beneficiaries and your publicly for hands and your fill-in of yours, and I have seen lawyers use these to plan mistrust to plan for children that perhaps the spouse does not know about. Lawyer at board, ring doll, business inside, and your work. So next you can see the spouse does not know about the lawyers at boards, ring dolls, and business insider. So next we have the staging appreciated real estate into works, and you can see here's some examples. Here's planting in the amount taxpayers, and you're planting the inflations for your charitable donations from their taxable income, but the alteration, the parallel, their philanthropy into guaranteed income for life. So I hope you understand. Thanks for watching this video. Like my video and subscribe my channel for more informative videos. Goodbye.